Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields push higher, pretty much erasing what we saw on Friday, the push lower down to 280. We settled today around 285. The market sort of absorbing the U.S.-Mexico trade deal. Likewise, still a lot of uncertainty out there, but I think some news that pushed equities to new all-time highs. We saw just a little bit of an adverse trade in bonds as bond prices go lower, yields up to 285. And if you look at market volatility, not a whole lot going on there. Pretty much a sideways trade, which I think is a little bit odd given we traded back into the range. Likewise, we saw some positive news, and with equities going up, all seems right in the world. But I think that the bond market's still not convinced that everything's okay. And if you look at what we heard from Chairman Powell late last week, yeah, he's very bullish on the economy. And yes, he wants to keep gradual rate hikes coming, but he threw out a very odd statement that he said, if inflation goes too high or growth isn't where it's supposed to be, the Fed will do whatever it takes. And this is during a policy normalization period. It's something that sounds eerily reminiscent of what Mr. Draghi said about European rates about a year plus ago, and doesn't really go hand in hand what the Fed's trying to do right now. So I think certainly the bond market continues to frown upon what is happening and is not buying into it, which is why I think you're seeing volatility hold steady here. And lastly, let's look at that curve. What happened? Well, early in the session, we saw 2s, 10s print another new low, going back about a decade, printed below 20. We did end the day above 20 on a strong 2-year note auction. So 2 years outperformed in the afternoon, but certainly the trend lower in the yield curve continues, and that will be a thorn in the Fed's side as we move forward. September FOMC right around the corner. That will be the Fed's next real talking point or ability to tell the market what's happening next. Yes, there is a 25 basis point rate hike coming. But December, while it is expected to see another rate hike in December, it is not a certainty. I think the market's looking for some clarity right now. So bond yields rally, or bond yields push higher, erasing Friday's move, but certainly not in the bear tone. We are still seeing bullish treasuries as we hold the range. This is Todd Colvin coming to you from the floor of the CME Group.